right, back here for another one. Welcome back, guys and gals. JJ here, schooloftrade.com, sidewaysmarkets.com. Another great psychology lesson for you guys and gals. And the question of the day today, question is, he says, you talk a lot about using a trading journal, but you never really told us how to use it. You're right, I haven't told you how to use it yet. He says, can you give us a strategy on how to get started with a journal, what type of journal we should use, and how to get the most from it? Great question. And you're right. I talk a lot about a trading journal because it's such an important aspect of trader development. I can't even think about where I would be today without my trading journal. So in today's psychology lesson, I'm going to give you a simple strategy on how to begin your trading journal. That's the hardest part. All the tools you need for your trading journal and how to use your journal for maximum benefits for your trading career. But, before I go into the lesson today, though, I need to remind you this psychology lesson is the most recent in a series of videos we do every week on this YouTube channel. These videos, they build on the topics we've already discussed. So if you're here for the first time today, it's great to meet you. But if you're here for the first time today, you might want to go back to the beginning of this series. What I'll do is I'll put a link up top here, top of the video. Follow that link. That'll take you back to the beginning and start watching these in sequence. Okay, I also want to remind you, if you're on our YouTube channel right now, make sure you subscribe to our YouTube channel. Click that little bell icon so you get notified every time I post something new. And if you really want to stay in tune with everything going on here at schooloftrade.com, head over to the homepage, schooloftrade.com, and join that mailing list. And that way you'll never miss another video. I'll put all the links today down in the description here on YouTube. Okay, we got that out of the way. Let's get into today's session. Today we're talking about a trading journal. How to start one, the tools you use, and how to squeeze out all the maximum benefit, right? So you can start making more money because of it. Because a lot of people assume that journaling doesn't make you more profitable, but hopefully I'm going to change that point of view here in today's video. So in my point of view, journaling, a trading journal or self reflection is essential for personal growth and development as a professional trader because it tells us what's working, it tells us what's not working, what to do more of, and what needs to be changed. And we can't make positive changes in our personal or professional lives if we don't keep track of what we're doing in a way that's easy to review at the end of the day, at the end of the week, and at the end of the month. And then making it easy to review, we have to make it easy to take action, right? So we can actually see the benefits, right, of that journal. Just like traders always look back on previous chart patterns to learn how to trade those chart patterns, a trader needs to look back on previous decisions, previous activities, if you want to improve them as well. The most effective way to look back at your previous actions or your previous decisions is to start keeping a journal. The key with this is to document as much as possible using your journal every day, and then carve out a certain amount of time each day and a certain amount of time each week to look back and review or read your journal. When you're new to trading, I would encourage you to write in your journal at all times. Include screenshots along with your writing and review the journal multiple times each day. So when you're new, you got to really kind of crank this up, right, a few notches. As you get more experience, you can dial this strategy back, entering new information in your journal at the end of the day or the end of the week, and then reflecting by reading your journal possibly weekly or just monthly once you get the ball rolling. It really all depends on where you are in your trading journey. The less you know about the markets and yourself, for that matter, the more you need to journal and vice versa. So one of the biggest mistakes we make as new traders is either not using a journal or even worse, writing in your journal and never investing the actual time you need to go back and actually read it. One important thing to understand is that keeping a journal is not going to make you a better trader just because you're keeping a journal. But when you begin to use that journal for reflection, then you start seeing its full potential, right? A journal, just by simply taking a journal, keeping a journal may be therapeutic, but we have to go out there and actually use it if we want to start making the positive changes that we want to work for. All right, in my experience, keeping a journal helps me identify a problem, right, that needs to be solved. So trades that I shouldn't be taking anymore. Keeping a journal helps me identify ways to improve my best trades. It identifies new opportunities that I never had considered before. And most importantly, keeping a journal helps to identify ways to avoid those what I call mental blind spots that are preventing me from executing my plan correctly each day, right? It helps identify those little decisions that I make each day that are probably not in my best interest. An example of this would be I use my journal at the beginning of my day to clearly define my plan for the morning session. I include screenshots of the charts I'm using, and then I add updates to the journal as the session develops. As I take each trade, I add screenshots for each trade, my reasoning for each trade, and then very important, a summary of my experiences with each trade and each day that I trade. Now, in an entire trading session, honestly, I probably spend 20 minutes total in writing the text, including screenshots and summaries. 20 minutes total, right? The entire day. It's not a very big investment in my time up front. The real investment in journaling, and this is where the real payoff in journaling comes at the end of the day, when I take anywhere from 30 to 60 minutes to review the journal and then write a summary. The key is writing that summary at the end of each trade and at the end of each day, because then at the end of the week, I can use that summary as a way to quickly digest what happened that week and make changes for the following week. So here's what I would do. Here's how I would recommend you use your journal, right? And again, there'll be some links on here. I'll put the links in the description of the YouTube video. I'll also put the links on the text that accompanies this on our blog at Sideways Markets. All right, so first, right, so here's how I would recommend to use your journal. First, start each day with a clearly written plan of attack. In other words, I would say, in quotations, I see crude oil trending lower with 2 legs down. I have a multi-tier channel, so I'm watching for selling opportunities at the midline and at the high of the channel. And a target would be back down to the low of the channel or the 3rd leg down. So that's an example of kind of like an opening paragraph. Then what I'll do is I'll include a screenshot of the chart that I'm watching at the beginning of the day. Okay, now for screenshot software, you can use free software such as Lightshot or Gyazo. Again, look at the links below the video or on the blog. Or you could always buy software such as Snagit or Jing. So you can get it free, right? Lightshot and Gyazo, I use Lightshot every day. Or you can buy Snagit or Jing from TechSmith. Okay, it doesn't really matter, but find a screenshot software tool you can use and add a screenshot to the text. Now, going forward throughout the day, update the journal with each trade you take. Provide a written reason of why you took the trade. Give specifics about the trade setup that you used, your level of confidence about that trade, and how you feel about the trade going into it. Then, like everything else, add a screenshot, right, of the trade that you're taking. Make sure that you include enough context in that screenshot for you to truly understand why you took the trade. You know, here's a common mistake. A lot of people just take a screenshot, right, that just shows the entry. You know, all you see is like just a few candlesticks, right? You can't see time, you can't see price, you can't see the context of the market, right? That's not good enough to just send a little bit, right? Just a little snippet of the chart, right? The chart's this big. Don't just put that, right? Put the whole thing in there, right? And what that will do is that will, right, by showing the full chart, you can then actually see the entire setup, right? What led up to the trade, how you got in, and obviously at that point you won't have enough information on how the trade ended, but you'll see that snapshot of why you took the trade, what was going through your mind, how you felt about it. Now, after the trade's closed, go back to your journal and add the results. And most importantly, add a little bit more detail, right, after you close out that trade. So with text now, was there anything you learned from this trade? Did you make a mental mistake that needs to be avoided next time? What was the experience like? Put that into words the best you can. Okay, so at this point now, right, we started our day with a summary of what our plan is. Okay, what your plan is, what you're looking to accomplish, entry locations. You know, you won't know everything up front, right? But general locations, general targets, your plan. Include a screenshot. Okay, then you take a trade, you write why you took that trade, the specific setup that you used, how you felt about it, and then add a screenshot for each trade. Again, each trade should not be a little tiny little image, right? It should show the whole picture of the chart you used to tell you should be taking the trade, right? Because remember, you want to be able to look back at this and go, oh yeah, I remember what I was doing at that point. That's why I took this. Right? Just a couple candlesticks in the entry on your chart's not going to make that big of a difference, right, at the end of the day when you try to go back and remember this stuff. Okay, so now, right, you've got your summary, you've got you're documenting your trades with screenshots and text. Now I want you to finish the trading session with one more screenshot and add a summary of what happened. In other words, at the end of the day, add a screenshot of the entire chart with all the trades marked up, and most importantly, take a few minutes to summarize in text how the day went, even if your initial plan was correct, right, or it was incorrect, and any important things you learned along the way that you can make your job easier next time. Do this each week, and you'll get better each time. Does that make sense? The best thing you can do is at the end of your day, take that screenshot, right? You've got all your analysis, you've got all the trades you took, and one of the things I always talk about in my trade room is to add breadcrumbs. You know, on my nightly newsletter, I always talk about the story the market's telling us, the market's context, right? What led up to me taking a trade? What was I thinking about each step of the day today? Try to put that in words and literally put it right on the chart, right? Use your text tool. Most charting software allows you to put a little text on there. Put that right on the chart. Here's what I thought here. Here's what I thought there. Put that. You want to be able to, at the end of the day, be able to look at that chart and bam, you're right back at 9 o'clock Eastern time again, right? Because remember, you can't trust your mind at the end of a long day to be able to recall all of this. Okay, so you have to be able to, at the end of your day, whether you've made money or lost money, whether it's a good or bad day, it doesn't matter. But at the end of the day, you've got to be able to go back and read your journal and quickly go, boom, this is what happened today. And then most importantly, the summary says this was the most important stuff that happened today. Okay, that's the thing. At the end of the day, add a summary. Okay, and we'll talk more about why that summary is so important. At the end of the week, right? Because now here we are. Now here comes Friday, right? So Monday through Friday, we're updating. Again, we're putting our initial plan in. We're documenting our trades. And then at the end of the day, we're putting that one last screenshot with all the breadcrumbs, right? And then a summary. Here's the most important thing that happened today, right? That's Monday through Friday. Now, Friday afternoon comes around, right? Or end of the morning on Friday. It's the end of your week, whatever the end of your week is. Now, those summaries are gold. Now go back and read all the summaries you wrote, right? The summary should be all the little golden nuggets you took away from that previous week, Monday through Friday, or whatever your week consists of, right? And I'm going to use those ideas to make an action plan for next week. Now, here's the next trick. In previous lessons, we talked about a 3x5 index card. I don't have one handy here right now, but a 3x5 index card. Okay, that 3x5 index card, you're then going to write down 3 to 5 actionable goals for next week. So at the end of the week, I read all the summaries. Okay, there should be a summary for Monday, Tuesday, Wednesday, Thursday, Friday. That summary is summarizing all the best stuff you learned from each of those days of the week. Now, take out an index card, a physical index card, nothing digital. Okay, and the reason for this is I want it to be right on my desk when I'm trading. Okay, I want to be right in front of me at all times. Okay, so use a 3x5 index card, and I want you to write down 3 to 5, keep it short, 3 to 5 actionable things you want to make for your goals next week. Now, I know you're going to be like me, and you're going to have like dozens of things you want to work on. Okay, it's okay if you have more than 3, 4, or 5 of these items, but we need to tackle the most important first, and we don't have unlimited time or unlimited resources. So trim it down to 3 to 5 so it's manageable for next week, and then keep that index card with you at your desk next week, staring you right in the face while you're trading if possible. Right? And even better, share that goal, right? Share what the contents of the index card with another trader and ask them to hold you accountable, right, to reaching those goals. Guys, the magic with this journaling technique is that you're documenting everything during the week, serving it up, right, with a summary of all the most important stuff you learned, and then taking action to make those changes for next week in a way that's actually manageable for a real human being. Because remember, right, if I'm trying to change 12 things next week, I'm probably going to get 0 done, right? If it's not easy, we won't do it as humans, okay? So there's the basic strategy. And if you want, go back and watch the video again, right, and grab it again. Again, also the text on this is on the blog at sidewaysmarkets.com. Now, I've learned a lot from my journal, and I've worked with over 3,000 clients here at School of Trade. Okay, one thing I've learned from reading my journal is that there are times of the day and times of the week when we're at our best and times when we're at our worst. And we need to do the most important work during the times when we're at our best. For example, I know that if I don't capture my notes during the trading session, I can't recall them as well after I'm finished. So it's vital to write down and grab those screenshots while it's happening. I've also learned that if I don't write that summary at the end of the day, when I go back at the end of the week, I'm too tired to read all the content, and I won't do it at all, right? So if I don't write the summary at the end of the day, I won't go back and read any of that journal on Friday because I'm so mentally exhausted from trading and working with clients, right? If you've got kids, don't even get me started. I mean, you can imagine, right? By the end of your week, are you really going to go back and read all that stuff? You're not. Okay, you might think you're going to on Monday, but by Friday afternoon, no, you're not going to go back and read it all. So the summary is so critical to make it all come together, to make it actionable. I've also learned that after I read the summary, the best thing I can do is identify the top 3 to 5 things that I want to do that next week, rather than just trying to remember it all. And again, keep the list small. Focus on a few things. Again, 3 to 5 things you want to improve, right? Don't make that list too long or you won't do any of it at all. I've also learned that my clients, when they use a journal, they almost always improve at a much faster rate than my clients who do not. I would rather have you do less trading and more journaling early in your career. Like I said, when you're new, there's a negative correlation, right, between the amount of experience you have and the amount of journaling you should be doing. So when you know nothing about the markets, you should literally be journaling more, right, than you're watching charts. That's a pretty simple way to think about it, right? And this is interesting because it clearly illustrates that I can teach the same strategy to 100 different people, but it's how they deal with adversity along the way and how they identify and overcome their mental blind spots, right? The decisions that they make that truly create a successful trader. You know, I've also seen that when my clients overtrade, overtrading is a big problem. When my clients overtrade, journaling becomes much harder because there's so much more to do. When they trade less often and more and with higher probability, journaling becomes a whole lot easier, which is a clear indicator that you're doing something right. Isn't that interesting, right? When you're over trading, guess what? Your journaling is going to be time intensive. That's a big heads up. That's a big clue that you're doing something wrong. Journaling should be easy. Trading is effectively pretty easy if you have a strategy that you can rely on and you're taking the most probable trades every day, right? Now, your journaling, let's be honest here, your journaling is going to make it easy for you to see patterns. Patterns in your trading and patterns in your decision making. Both of these types of patterns and identifying these patterns will be essential to keep improving. But it takes a little bit of time before those patterns are going to start to appear. You know, I've seen personally that it takes a few weeks of journaling to really start seeing the benefits, to start seeing those patterns. You know, just like exercise. You know, if you start a new exercise routine, at first you don't see much improvement at all. But then all of a sudden it kicks in and you can clearly see results. The hardest part is getting started. But once you get into the routine of journaling, just like exercise, it gets a whole lot easier. You know, I've seen my clients use journals in so many different ways. I can teach you my way. I gave you a great formula here already today, but I can pretty much guarantee that you will start with that, but then you'll adapt to better suit your style of trading and your style of journaling, which is great. You know, that's all I can do as a teacher, as a mentor, as a coach, is to give you a formula that's worked for me, right? Make some small changes based on what's worked for my clients the best, and then give it to you and allow you to bang out the dents and make it work for you as well. You know, I've seen proof, right? indisputable proof from my clients, not just me personally, but my clients as well, that setting trading goals without the use of a trading journal is like planning a vacation and then never buying the plane ticket. In other words, a goal without a journal is just a good idea. It's good intentions. It's a happy thought, but you're lacking the vehicle you need to actually activate the change that's necessary to get you where you want to go. You know, people always say setting goals, and I've heard this millions of times, right? Setting goals is not about achieving the goal. It's about the journey to getting to the goal and that making you a better person. Right? You don't accomplish the goal because you're working hard. You're working hard, and it's actually making you a better person, right, to accomplish that goal. It's an amazing thing, right? So a goal without a journal, a goal without a means of getting to it, that journal is going to get you there, right? It'll keep track, find those patterns, and allow you to use those patterns to make positive change. One thing I've learned about coaching traders is that most of us want to be successful. We want to learn trading. We want to learn the patterns. We want to earn the money and get the lifestyle and the freedom that comes with it. But many people don't see the value in understanding themselves and how their small actions and their decisions are impacting their ability to do their jobs. It hurts inside, right? Everybody wants to be successful. We all want to make the money. But it's painful to go through that transformation process to become the person that it takes to earn that success. In other words, most traders are motivated by money, right? They're motivated to earn money, but not motivated to the little things it takes to earn the money, right? And anyone with a drop of trading experience knows that you can't have a successful trading career if you don't have knowledge of both the markets and about yourself. The best traders in the world, the most successful traders I've ever worked with, they make it a top priority to keep improving their trading, but more importantly, to keep improving themselves, their mindset, and their decision-making skills. You know, in coming lessons, a little preview, coming up in the future lessons, I'm going to go into a lot more detail about how we can use our journal to keep improving. But for today, your homework, you know, they call me Professor JJ here at School of Trade, your homework is to get this journal started, right, which is always the hardest part. It's going to feel like you're wasting time because it's not looking at charts. Right? You know, we oftentimes assume that journaling is a waste of time, but soon it will get easier. Soon it will become routine, and soon you'll start seeing those patterns in your trading and the patterns in your decision making that are going to start to really show you where you can remove the bad stuff and do more of the good stuff. Wow, we have covered a ton in this psychology video. Let's wrap it all up and do a quick recap. We talked about using a journal today. It's extremely important for a successful trading career because it helps us identify patterns in our trading and patterns in our decision-making skills. With that information, knowing those patterns, we can then take actionable steps to keep improving. It's hard at first, but making it routine and sticking to it will yield the best results. You don't need very much to start journaling. It's not expensive. All you need is a Word document if you're on a PC, or a Pages document, right, or a whatever document, right, all digital these days. Screen capture software. I gave you guys 4 different ideas for screen capture software. I would say you need about 20 to 30 minutes every day and about an hour each week, right, to write in your journal and summarize, and then read the summary at the end of the week, right, and use that 3x5 index card to make actionable changes, right, the following week. The key is using your time wisely. Documenting everything during the day, write that summary, review those summaries end of the week, right, and then create that short list, right, short list of goals for next week. Okay, because if you make it a long list, you won't do nothing, right? Do this for a few weeks consistently, and you're going to start seeing those patterns. And there's gold in them patterns, even though they don't involve candlesticks. And again, in the coming lessons, we're going to talk more about how to use that data, how to use those patterns, right? Because that knowledge is power. And the power to improve your trading, I think you'll probably agree, is worth the time invested. All right, guys, wrapping things up, I hope you found a ton of value in today's psychology lesson. It was a long one, so I appreciate you sticking around. Do me a favor, drop me a comment below the video today with any additional topics you'd like to see me cover in my next psychology video. Make sure you give me a thumbs up if you found value. Subscribe to the channel if you're not already. And please don't forget to share this video with a friend. And please don't forget, come out and join me sometime 8 o'clock Eastern Time, every morning in my trade room with all of our clients here at schooloftrade.com. We get a great free trial on the homepage. And don't forget to catch my nightly newsletter Monday through Thursday before 8 p.m. Eastern Time. I'm going to come back in a few days for another psychology lesson. In the meantime, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.